So you're thinking about buying a home, but you have a lot of questions. You're not alone. Here are some answers to real questions we've gotten from our members. Why should I buy a house? Let's break it down. The goal to buying a house is to not only find a great place to live, but to also build equity. Building equity is a strategy to maintain overall long-term wealth. Instead of paying a landlord when you're a renter, paying your mortgage is investing in your future self. My parents say I need 20% down to buy a house. Is that true? That myth is busted. It is ideal to have some funds saved up front, but here at Virginia Credit Union, we have a variety of loan products available that can help supplement your down payment and cover some of your closing costs. Pro tip: there will be fees associated with buying your house that is outside of your mortgage. Be sure to factor in fees like a home inspection, loan application fee, and closing costs. According to a number of sources, the average home inspection in Virginia is around $400, and the loan application fee is usually a flat fee but could cap out around $500. Actual price may vary. So what can I actually afford? What you can qualify for and what you can afford could be two different things. A good rule of thumb is to not spend more than 1/3 of your net income on your mortgage. Let's say you make $60,000 and your partner or spouse makes $50,000 a year. That comes to around $7,700 net income per month. 1/3 would be about $2,600 a month to spend on that mortgage. Be sure to consider your lifestyle and other costs, as getting pre-qualified will help you know what range you should be shopping in. What's the difference between pre-qualified and pre-approval? Okay, these sound the same, but are different and come in at different times of the buying process. Getting a pre-qualified letter allows you to start shopping for a home with confidence, as you know the loan amount that you'll qualify for. You'll usually present this letter to your realtor, and together you'll know what range you should shop within. When you find your home and you're ready to make an offer, you'll need a pre-approval letter. For a pre-approval, you have to provide a little bit more information. This letter basically shows the seller that the funds behind your offer are legit. For both a pre-qualification and pre-approval, you'll work with a mortgage loan officer or an MLO. What does my credit score need to be to buy a house? Credit scores range from 300 to 850. Pro tip: you want to have a score somewhere around or above 640. Don't know what your credit score is? We recommend going to annualcreditreport.com to download your credit report and see where you stand. What about my student loans? Student loans are a part of our everyday, and we get a ton of questions about this. Just because you have student loans doesn't disqualify you from owning a house, but they do impact your overall financial situation and key factors like your credit score and debt to income ratio, also known as DTI. DTI includes all of your monthly debt payments, like a car payment or student loan, divided by your monthly gross income. Lenders use DTI to determine your eligibility for a mortgage. Our recommended DTI is under 43%. Pro tip: when qualifying for a mortgage, your credit union will calculate your potential mortgage payment, and this will also include all income and debts of each applicant. So, if two people are applying, the DTI would calculate based upon each person. This could be helpful if one borrower has more income and less debt. Whew. We know this is a lot to take in, especially since it's probably all new information. Let's take a quick breather, shake it off. What better way than to take a joke break? What kind of house does Chuck Norris own? A roundhouse. Anything I should avoid while shopping for a house? If you have existing debt, try to pay it down to lower your balances. But don't close out those accounts, as that may negatively impact your credit score. Also, don't take out any new debt. Now is not the time to get a new car. Finally, try not to change jobs. Changing jobs immediately before or during the application process may cause problems, especially if the job is in a different line of work or if there is a reduction in pay. My lease is ending in 6 months. When should I start looking to buy? So let's say your lease ends in June. You should start thinking about buying in January, but the sooner the better. You can prepare your credit and finances in advance. And 6 months is a good place to start. Pro tip, finding a house isn't always fast, and closing could take up to 45 days. Sometimes closing can be a moving target, so it's important to know your options with your lease. For example, do you have the ability to go month to month? A month-to-month lease typically costs more, so be sure to factor this into your budget. Who should I go to first, a mortgage loan officer or a realtor? First, you'll want to talk to an experienced mortgage loan officer or MLO. They'll be your financing BFF, helping you find out how much you can afford and the right financing for your unique situation. Remember, an MLO will also help you get your initial pre-qualification letter and your eventual pre-approval letter. You'll need both of these to submit an offer. Next, you'll want to connect with a realtor like our friends at Joyner Fine Properties. This will be someone to help you open doors, submit offers, and work with the sellers of your eventual home. The great thing is, there's no cost to speak with an MLO or realtor. How are you feeling? Hopefully these questions and answers will help you confidently go into your house buying journey. But don't worry, we're always here to help. Together, our MLOs can help you make the home buying process easy, and they'll be with you every step of the way.